The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. It's Thursday morning, and all the airports in New York are closed, so I'm definitely still sitting here. Can't get up there right now, maybe tomorrow. We're going to take a look at crude oil really quick. And I'm just in love with how many comments on the tube and on the internet there are about why oil should go down, and all these pictures of the huge storage facilities, I guess, packed to the brim. And this thing is not budging on the downside. And this is very similar, actually, to when, and the best cure for lower prices is lower prices, by the way. But as we're headed down here, and I'm going to show my chart. As we were headed south, from that $100 a barrel, when we started technically breaking down, I could go back and show you the profiles a little bit better view of them. But we were going down. There was a lot of reasons on the way down. If you just kind of remember what was going on here, there was the thing going on in Russia, the Ukraine. I think some old ministry guy got shot in Lagos one day. I mean, there was a ton of things that should have bounced the oil market, and it just kept going down. There was global unrest. You got these yahoos in the Middle East. And remember, all the way down, we never broke profiles. And that was a lot of fundamental reasons, or many fundamental reasons, that this thing should have bounced at some point and maybe reversed. And, that just didn't happen. But now, alternatively speaking, we've got a market that won't crater based on all this, news on the supply side and the fundamental reasons why it should go down. I mean, there was fundamental reasons why it should have bounced before, didn't. Now there's fundamental reasons why it should go down, not doing it. And hey, you got to love that. So again, place your stops in. We got that head above, the Maginot line around 50. And now whoever's done that trade's collected about $2 a barrel for it. We're a little precarious sitting down here between this at the beginning of the week, between in the middle of the fair auction, blah blah blah, whatever. But you've got targets above 53.59. I'm going to stand by that. And guess what? That's $3.50 a barrel above 50. And in reality, what is that? 6 or 7% move? And thanks. Next. That's kind of the way you got to look at that, I believe. But, if we can get that close above 53.60, 54.32, this thing could be just squeeze the heck out of some people, especially if there's, just it seems like these out of the blue disturbances, fundamentally speaking, seem to happen in times like this. And then just, the pain's too great. And a lot of these folks who are loaded up on the short side got to start covering. And usually there's and you guys trade the gold market, you know what I'm talking about. There's usually kind of a move in the wrong direction before it moves in the right direction. So keep all that in mind. I'm still a big fan. I don't think this, there's no free lunch out there, and everybody who's piling into these shorts right now, they're going to get the heck scared out of them, in my opinion. That's fundamentally speaking. But technically speaking, we're kind of in the balanced area on the long term, and we're also in the balanced area on the intermediate. And everything I just said, that's not a bad state for this thing to be in for longs. I don't know if you guys watched the Duke game last night. Basketball is huge around here. I called my mom up and I said, "Mom, we should watch the game." She's in town, and she's watched a lot of basketball games in her lifetime. A lot of my basketball games, but we started watching it, and this is how ugly it was. After about 10 minutes or 12 minutes into that game, the halftime score was like 55-17 or something. Duke over Wake Forest, and Wake Forest is not a bad team, but this was hilarious. I woke up laughing about it this morning. She said after about 10 or 15 minutes, she said, "Can't they stop this?" Like literally, it was almost like merciful to stop the game. It was an unbelievable thrashing. So I don't know if you guys watch basketball, but if you can catch that. Oh yeah, man! It is going to be a killer tournament next week, and Duke. When you play in Cameron Indoor Stadium, I don't know that's like. I've been there, but being on that floor with the Dukies going crazy, that's gotta be a little bit nerve rattling. If you can watch, man, that's what a demolish. Okay, here we go. Gold, we talked about kind of staying away from this. UVA, University of Virginia, those guys are all business. I actually think they're going to take the whole thing this year. I mean, it's like watching a bunch of guys with no emotions. They don't sweat. They don't breathe hard. They just get it done methodically, crush people. Anyway, take a look at gold futures. We're down here. And we kind of talked about staying away from this. Right now is still kind of a stay away from trade. I don't, see a lot of leverage on gold, so that's still the case for that. We're going to take a look back at the S&Ps really quick, and I'm going to bring up something. We talked yesterday about a kind of a relaxing moment that may happen with the S&Ps and targets down below of 80. This was pre-market. We were talking about this. Targets down below of 2084, 2084.50. That's where our unfair lows are. And we can actually, find those inflection points in the scanner. I'm just going to show you really, really quick. Go down to my S&Ps and where are we at? Well, there we are. Okay. And as we look at this, you'll see 2084.45. So we always talk about some targets and, what's the long-term trend? Where's the leverage? And as we look at this, we talked about these speed dials up top, speedometers, Brett speedometers. I've called them 3 different things in the last 10 seconds. Let's just call them Brett speedometers. And as we look at the daily, we talked about this thing possibly rolling over. That happened during the day if you were watching this. And when we got down to that 2084.50, this weekly, the long-term trend, to sum this up, is still up. And we were looking at some cracks in the armor to try to catch some shorts. And that happened. And we actually hit this pretty much to the tick yesterday. And then obviously this is, the normal course of action for the S&Ps. And we did not get it closed below. That was a takeout point. I took out half my position, hoping we'd rattle around and maybe retest or, maybe be able to get some shorts off higher, and that didn't happen. But we talked yesterday about how do you, if you're preparing for, if there's some cracks in the armor and you want to possibly trade this down to 2072 for a retest of those weekly unfair highs at some point. I've got up the, and we've got, let's see, on the March options on the S&Ps, we've got till the 20th. So we got 2 weeks left. All right, a lot can happen in 2 weeks, especially with an unemployment report coming up. The VIX is 15. All right, so when the VIX is relatively low, the old mindset and on the floor down there was get long. I mean, you want to be long. You want to be long premium when the volatility is low. You want to try to sell premium when the volatility is high. And that can be kind of scary, that second part of that statement. So you need to hedge that if you can. But what we're talking about and what we talked about yesterday was taking the S&Ps. If you're trying to prepare for a move down and you don't want to suffer all these noisy moments up top, we talked about a strategy. And since that major inflection point's around 2070, we talked about buying in the money calls and shorting the futures. And right now, I think the S&P's the March contract. These are the March options. The March contract's around 2100. So let's just say we shorted 2100, and 2070 is 30 points below. So if you can do the math really quick, there's about 40 points of non-intrinsic value part of this option call. Now we're talking about buying in the money calls and shorting futures. All right. Now what's that going to do for you? That's going to allow you, okay, since the market could move a lot higher, as we know, let's just say it moves 10 points higher, you're with considering that this is going to go to intrinsic value pretty much totally. If we go up to like 2150, that's just a fact. Plus the time left is going to eat that up. But think about it. You know, if we edge up, this thing's going to more than likely, it will be pretty much tick for tick with the futures going against you. The calls are going to be going with you. And it's going to shave off a little bit as we go higher as far as that 10 points of just sheer premium outside of intrinsic value. But what does it allow you to do? It allows you to hang in there and just kind of wait for that fall off. And then when the fall off happens, you know, the VIX is going to, or if it happens, the VIX is going to blow up. Therefore, option pricing is going to incorporate that. Therefore, a lot of these calls that are in the money now are going to hold their value to some degree once we start getting near at the money, and that at the money 2072 is based on that weekly unfair high. So this is kind of a very low risk trade. It's very hedged. You know, if we move down 10 or 15 S&Ps, you're not going to be, you know, you're not going to be whistling Dixie off this trade. You know, we want to get back down at, you know, to 2072 or lower, especially by expiration, but you will get some moves and you will be able to kind of massage this. And if we do get a move in the way of this particular trade, you know, you can start locking in profits by, you know, possibly selling some overpumped puts that the VIX will be pricing, you know, very highly in a situation like that. And it's just a neat little thing to play with. If you can do it in a test account, it's not a bad way to try to weather storms and not be shaken out of trades. And that's kind of the nerve-wracking type thing for me, is to be right and then get stopped out of the trade twice. So, but, you know, that's part of trading. But, you know, just throwing this out there, it's not a bad way to look at the markets. And I'm going to get something else up here really, really quick before we go to the first break. Trading 2103 pre-market. So, as we look at the S&Ps, you know, we met some targets down below. Our breath is, I don't know what's going to happen as far as we need to kind of get closer to the market opening here to really gauge. This was kind of the on-close data yesterday. And as we looked at the on-close data, we still had 144 stocks still trading below profile. So the cracks are still here. We're in the middle of a fair auction. We're going to talk about this a little bit more when we come back from our first break.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're looking at the S&Ps, and we've obviously had a rally off that 2084 area. That was our targets from yesterday. Just to review, here's our automated systems that actually are. I was talking to Tom and showing him our website for this yesterday. And what happened was, these are I can take these out, these 240s, but these are our daily inflection points. So recently, we've had a pretty good run with this. This has been the trade analysis right about 50% of the time. Had a lot more long trades than short trades over the past two and a half years. Those short trades have been profitable when they've been put on. Here's the P&L graph for this particular. This is a very simple proof of concept type situation. But as you can see there, we got into another trade on this system yesterday. We exited unfair highs around 2100. We kind of like let this thing gyrate around. This is all an automated process. But as we come back down into this unfair low on this daily box around this 2084.85 area, and I've got this back tested right now in the continuous contract, so it's like a point off of what you're seeing. But above unfair low, that means it took a long right there, and it's in a long trade on this particular system. Now, that's a pretty docile system. It only trades inflection points from dailies and uses the leverage of breadth to filter out longs at certain times or filter out shorts at certain times. It doesn't trade a lot. I actually like systems that trade less. Maybe it's because I'm getting older. I don't want the excitement, but actually, when you want a big sample set when you're, let's see here. Okay, I hope everybody sees my chart. I heard we could not see my chart for a second there. Are we good? Are we back? Confirmed. All right, here we go. So as we look at this, the 240 situation on the S&Ps, I would consider that 2100 area still a decent leverage point. But I want to now at this stage, I want to kind of wait for the market to get closer to the opening area. I mean, I love the way this is still kind of overhanging supply-ish, if you will. When we started looking at this at the beginning of the week, remember this was around 42. Now it's 143 as of the close yesterday, and actually we had kind of turned negative on our dailies. But remember, I mean, the long-term view, long-term trend, not in danger whatsoever right now, even though we've had some cracks in the armor on the S&P. So that's kind of the systematic situation I showed you. Those systems are going to be available pretty quickly here. Still 2100 is a big number for me, so we're going to have to wait again until the market opens a little bit here. Let's see how the stock's kind of temperament is, and then I'm not opposed to still trying to leverage off the short side, but we got to get back down below it. Refresh, please. What does that mean? Don't know what that means, but I'm all about refreshing and refreshments. So. All right. So here we go. Got some things to cover. I want to cover GoPro really quick. GPRO. All righty. Okay, here's the weekly on GoPro. Okay, I don't know. UT from Pennsylvania. I don't know exactly what your question is, but we'll okay. All right, very good. All right, so 54.33 was that kind of close below first profile on GoPro. Remember, this stock hasn't been a stock that long, but as we had this profile up here very wide, we were closing below, going back and retesting. Now we're just kind of drifting lower, and what do you do now? So as of yesterday, we kind of bumped back up into that inflection point, 43.91. Again, if it ain't broke, don't fix it. You got to, things on our lows can go lower. We talk about that all the time. Lose a little, lose a little, lose a little, make a lot. This is a situation where I think you've got another pressure point here. I guess the question really is from the email, is it a buy? The only way I would consider it a buy, even on the intermediate term, is, to get clean and clear of 43.91 now, close above, but the real technical damage for this stock is going to be above 47. So we'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Man, there's some either Tom's putting subliminal messages in the ads on TFNN, or they're just very catchy tunes, because I just find myself whistling in the morning TFNN advertisements and music and stuff like that. I don't know if that happens to you guys. All right. We're going to take a look at something very near and dear to my heart, XLF. I like this. I like the action that's not happening as the market's going up. I like the stops above 2450 based on your appetite for risk. Enough said. Let's move on. You know, this yesterday, let's see, pre-market 78.65. Still looking for a reason to get back in the water on the XLE. Kind of had to take some medicine down below these inflection points on the daily. The weekly's, you know, still looking great, but above 78.81, I'm going to start getting back into this XLE. You know, we had some reasons to take off some weight up top, and there's some stocks within the XLE that are really, I mean, ExxonMobil we looked at yesterday is not the best candidate. You know, looking at everything from a relative strength standpoint, relative strength from the sector versus crude oil, and relative strength of the instruments versus the XLE, ExxonMobil wasn't a candidate, and we talked about that yesterday. but there are some great candidates, and you can find them right in the scanner, and you can find the battle points or inflection points to pick battles around or place stops above or below in your trading. Gives it to you pretty plain as day in there. That's the situation in the XLE. Every once in a while, I don't name this news service, but it just continues to, really astound me at the after the fact. Okay, they put this on their front page. Okay, things that are possible buys. All right. Well, there's no doubt about this. I'm just going to pull up MKTX. So we're just going to look at they got this on their front page this morning. But if you look at something like this, where was the buy point? I mean, the buy point's not here. I mean, this is causing possibly folks to, maybe even pick the high print here. Okay, got a caller. Okay, yeah. All right, let's go to the caller. James, are you there? Hello?
Yes, sir. I'm here. I'm sorry. I'm here, John.
How are you? Down in Brownsville, Texas?
Yeah. Well, I'm on the road. I'm traveling up north. But
Okay.
I'd like to ask you.
Okay.
First of all, sometimes that word inflection, I seem to naturally want to say infliction.
So you want to know what inflection means? Is that kind of the definition?
No. That's a good question too. I wasn't thinking that, but I'll give you a good credit shout out. That's a good idea too. But I'm looking at yesterday's action and I'm looking at today's action so far, and you were spot on yesterday with your 20. I believe it was 2085-ish on the ES Mini, and I'm thinking, are we looking for some kind of downtrend for a little bit and then a kickoff bounce? Because I'm looking.
You want me to kind of summarize maybe the thoughts that I have about that really quick? Is that you mean just kind of give you a little bit of thought on the S&Ps, and is that kind of what you?
Yeah, we're bouncing a lot. We're bouncing a lot, and but I keep my eye on the U.S. Japanese yen, and it's up 46 ticks this morning.
Yeah,
and that seems to help the American stocks to get a little boost. So I'm looking for a boost actually today, but what do I know?
Well, yeah. I mean, okay. So, what is the U.S. stock market like fundamentally, and kind of interrelated? Let's kind of define that first. The U.S. stock market seemingly loves a strong dollar now. All right, and there's a lot of thoughts on that, but like just to summarize, loves a strong dollar, so dollar is up. Japanese yen is to some degree closely related to that, and we've been talking about, as you know, James, the dollar is not a short, and we've got some areas that we've been talking about just putting stops below and letting this thing rattle around and possibly move higher. Stops below 93.67. We also talked about the yen kind of being in breakout mode again. In fact, yesterday we're talking about just thank goodness we had come back for another leverage point around after the close above, giving us a free lunch there almost around 119.45. All right, and that now just like you said, the yen's moving up. Doesn't have to keep moving up, but you've got some points in this now, and I think you've actually got 100 pips that have happened since we talked about it yesterday on the upside. New profile has appeared, so new stops can be ratcheted up now right below 119.94. All right, because that's where we're going to get back into the balance area, but that's based on your appetite for risk, and that's based on also this pinch in kind of mode that the yen has been in. I mean, this is, you die for things like this to happen. I mean, like these are great setups, not to mention, the fundamental concept that the Japanese government, whether they state it or not, still wants this thing to get devalued. Are you still there, James? You're still there, right?
Oh yeah, I'm here. I'm here.
Okay, so you got a lot of things on your side as far as the yen, the dollar, the U.S. stock market loving this action, obviously. But as we look at, we try to find trading opportunities, and yesterday we just, if you're going to go long, there were much better reasons to kind of sit tight and wait for this thing to come back down into inflection points. Keep your eye on the breadth situation that we follow all the time based on our profiles and whether stocks are starting to have disconnects with the broad market or not. And I actually think that, just looking at, the breadth and the long-term weeklies and stuff like that, I mean, we're not in huge endangerment on a long-term basis for a massive sell-off, and you're never going to, if you play the pick the top or the bottom game, you're going to get taken out in a body bag. You just got to wait for some confirmations, let somebody else figure that part out. But as we look at this, I mean, I'm still seeing cracks in the armor, so that's why I was kind of hinting towards, we got a chance. There's a trading opportunity for one to trade down into 2085, that general area. That's basically as stingy as this market has been to kind of kill the shorts all the time. That's basically a huge victory. Basically, is get down to 2080-45. Believe it or not, coming off all-time highs. Now, the longer-term play, because I'm always terrified that this thing's going to do another moonshot, and Yellen's going to come on and say something that, the market. The thing you got to think about is she ever going to say anything the market's not going to like? Probably not. All right. Now, as soon as people get past that circus and start thinking, okay, how does the musical chairs game continue and nobody get hurt? That's kind of ultimately, I think, where this thing, goes back to sanity at some point. But if you're looking at the cracks in the armor, and you're looking at, our breadth situation, and you're looking at a way to buffer or mitigate some new move up in the S&Ps by trying to take advantage of that cracks in the armor situation. We talked initially, I don't know if you caught the beginning of the show, but we talked about, let's buy some in the money calls and let's short some futures, and let's let this thing go against us another 20 points if it has to, and those calls will protect us and probably only be a downside risk because they're tick for tick with the futures going against us, probably about 4 or 5 points, even with the 20-point move, and maybe not even that much, maybe 3 points. That, in my opinion, is a way to look at this because, there's no free lunch. Like we talked about earlier, there's usually a wrong move before there's a right move. And James, right now, I mean, there's not a big weekly disconnect in the breadth, and that's the most powerful one. It doesn't happen that often, but it's a great barometer to really, really say, this market's getting disconnected. The leaders are not having the followers of the index, kind of join together. That hasn't happened yet, but we're starting to see some tension. All right, so that's my long-term view is just to kind of hedge it. The short-term view is, we just got to trade on shorter-term time frames, and I'm actually looking at these 240s right now and trying to leverage the shorts with stops above off the 2100 general area. Does that make any sense?
Yeah, you said 240s. You mean
the 240-minute time frame? Yeah.
Oh, okay.
The profiles on the 240. And if you don't have a chart, I'm showing charts, but if you don't have the charts, you get a trial of the scanner. These things are pretty plainly painted out for you. In fact, it says top right there, 2101.25. That's kind of where looks like I'm getting barbecue emails now. That's a new one. So as we scroll across the S&Ps, I can go to any time frame and look at where the profiles actually are. The neat thing is, if you go in here and just kind of stretch this out and put a couple of indices in it at the time, you can find things that are sitting on tops or bottoms of profiles and not have to. One of the things that's been dangerous for me in the past is I get glued into trading only a few products, and then I start seeing things that aren't there. And then the more you sit in front of this machine, the more you want to click the buttons. and it's an all-day torture affair. You know, I mean, like if you sit here all day long, you want to use something like a scanner to kind of generate new ideas and put probabilities, hopefully, in your favor, and not get glued to the same usual suspects all the time. I kind of went off on a tangent, James, but that's the sum of it.
Yeah, can I ask you? I have a summary of an idea what I think is going to happen this morning around before 10 o'clock.
Okay, shoot.
And by the way, at 10 o'clock there's a factory order information, so that's always a little one way or another move in the markets.
Yep.
Okay, so my little summary that is a fly on the wall, talking to myself a lot. I think we're going to have a gap fill this morning. The ESH5, the E-mini is going to fill its gap down to the 2095-ish. And I think we're going to stabilize there and maybe a little bit of time. But I think because the U.S.-Japanese yen is doing strong, above what I usually have as my inflection point of a bullish up or bearish down, it's above my bullish signal. So I think today could be a bullish kind of day for the ES, the stock market. We'll see.
Yeah.
Time will tell.
Yeah, I hear what you're saying, but you know, all those things considered, like you're saying already, the dollar, the yen, the bonds and the notes are kind of hanging around on their lows right now. You know, market is, I don't think there's a consolidated, you know, long thought process in everybody's mind right now. So just watch out. You know, if you're going to play that game, make sure you put your stops in. I'm actually looking ultimately for a retest down below at least at 2084, but I'm really thinking that we're going to have a retest of 2072 down there. So at some point,
the next couple of days, in the next short while.
You know what? That unemployment report's coming. They can't keep painting the tape like they have been doing, so to speak. I'm thinking that the risk is to be long into that report now. You know, I mean, I'm a big proponent of, you know, not being in anything before a big report like that. But I'm terrified to hold one share of Verizon overnight. But that's just me, you know. But you know, I mean, that report, I don't think there's a lot of upside in staying long through that report. So, James, thanks for calling, man. I know Brownsville's warm. Cool. We'll talk to you soon.
Thanks for your time.
All right. Great question. All right, guys. Just to sum it up here, we got about, what is this? Oh, we got 30 seconds. Okay. Yeah, it was a great question. It was good to discuss all that. I sincerely hope it was okay to discuss all that. We're going to move into the DAX. All right. Now, as we show this, I'm just going to reference our buddy, the euro. The gift that keeps on giving. This is not on sale. I'm going to say it every day. The only thing that's concerning right now about that trade, we'll talk about when we get back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Just checking something here. All right, we were looking at the euro. And we were trying to talk about the DAX, but we got to reference the euro, and we got to see that this thing's just getting hammered again. It's like the gift that keeps on giving. And again, using the 240s with a little bit of noise factor, this gives you areas of concern to start looking at picking battles, blocking out the long side. There's the weekly. Don't see a lot of reasons here, as usual, to look at this from the long side. Let's look at the DAX, get some questions about this. You know, this is a product that we've been just freely preaching that it's not a good idea to short this thing and try to find support. That euro's helping that concept. Be aware of that. If you're trading the DAX, you know, don't try to be the hero. Kind of made recent all-time highs again, and we're reversing a little bit, but you got to keep your eye on the euro. This by default can just keep traipsing up. All right, that's the answer to that question. We were going to look at a stock MKTX before we had the caller. And this is, again, that news service that is extremely global. Tells you, hey, it's time to get in this now. Well, the profiles actually told you 77.47. That was 7 or 8 points ago. That's where you got to look to these and find areas to buy support or sell resistance or whatever. But you had that buy support area come down in that inflection point. That's where you could pick a battle, put stops in below, put basically a really good risk reward trade on. Here's the situation, and it's criminal in my mind to just throw these things out there like that. It just gets under my skin that people might be actually. Okay, here AKRX, another one. There's your inflection point again. Why didn't they tell you this the day before? There we go. Profiles coming true again. I could go on, but I'm not. We're going to look at McDonald's really quick. This thing's been in the news, and everybody's kind of jumping on the Mickey D's bandwagon again. As soon as we broke above this 95.52, all bets are off on the short side. So that's the way you got to look at it. Here's the long term, 94.68, the breakout point, and 95.52. So that DMZ. Now what do? You can't buy it up here. If you miss the train on the breakout, that's the way the ball bounces. But right now we're going to have to wait for new profiles to appear. These will be given to you in the scanner to start making some decisions with this. And, also got to keep an eye on the broad market in general for stocks like this. All right. We got about 30 seconds left. So what we're going to do is go back to the NASDAQ, actually. And different situation altogether in the S&Ps. 4,400. We got, let's see, yesterday we came back down to 4,419. And, we're sitting up top here again. But again, I think our breaths are going to cause this thing to relax again, the S&Ps and the NASDAQ. So just keep your eye on the breath situation and the inflection points that are provided. And we've got one at 44.52 on the 240s. Deep Roads is next, guys. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.